Welcome to S&P's European loan market video overview, detailing leveraged finance trends and activity during March and first quarter 2012. I'm Suchit Gupta, a member of S&P Capital IQ's leverage commentary and data team, a unit of S&P that is not affiliated with S&P Ratings. For the next few minutes, I'll walk you through a review of recent loan and high-yield bond market trends in Europe before winding up with themes to watch for in April and early May 2012. Before we start, please know you can follow LCD on Twitter, Facebook, and can join the more than 7,000 contacts in LCD's Leveraged Loan group on LinkedIn. We're pleased to announce the launch of LeveragedLoan.com, a free website promoting the asset class. On it, you'll find recent market stats, news and analysis, leveraged finance job postings, and an online primer detailing the key terms of the leveraged finance process. The links to our new website and to follow LCD's social channels are in the info section on our YouTube channel. You can also download the slides for this video at slideshare.net. The market got its confidence back in March. The market digested the outcome of Greece's restructuring and recalibrated their internal risk models. Risk was back on. Total inflows into European high-yield funds for the last 4 weeks was $242 million, according to data from JP Morgan. Leveraged loan issuance stood at $2.8 billion for the month, and high-yield bond issuance for the month was €4.7 billion. With a healthy primary market, investors turned their attention to the new issue market, and there was a slight drop-off in secondary prices. The secondary loan market finished the month down 21 bips at 95.43, while high-yield bonds finished the month down 29 bips at 98.22. The S&P European Leveraged Loan Index, the LE, had a positive return of 0.99% ex-currency for the month of March. The primary market remained open for both loans and bonds. With the high-yield markets open again, a number of issuers did bond for loan takeouts. However, default rates did tick up and are expected to rise further during the year. Focusing on the secondary loan market, this chart details the average price of LCD's European Loan Flow Name Composite, a measure of the 12 largest, most liquid loans consisting of 10 issuers since 2002. As loan investors turned their attention to the primary market, secondary loan prices fell 21 bips to finish the month at 95.43. However, loan bids are up almost 200 bips for the quarter ending March 31, 2012. This next chart details the average price of LCD's European High-Yield Flow Name Composite, a measure of the 12 most liquid high-yield issues since the beginning of the year 2010. With accounts focusing on the busy primary market, the secondary market fell for high-yield bonds 29 bips to finish the month at 98.22. However, for the first quarter 2012, high-yield bonds were up 975 bips. This next chart details the monthly return of the LE, a broad measure of European loan market returns that LCD calculates. All returns are ex-currency unless otherwise stated. Even with the secondary market down in March, the European loan market posted a positive return of 0.99% in March, up from the 0.73% in February. The total return for the LE for the first quarter 2012 is a positive 4.36% versus 4.23% for the first quarter 2011. Now we turn from the secondary to the primary. This graph details new issue volume for both leveraged loans and high-yield bonds. The primary market was open for both leveraged loans and high-yield bonds. Total inflows into European high-yield funds for the last 4 weeks was $242 million, according to data from JP Morgan. High-yield bond issuance in March 2012 was €4.7 billion, consisting of market stalwarts, crossover credits, cross-border deals, as well as hung bridges. This brought the first quarter 2012 high-yield bond issuance up to €12.2 billion. New issue leveraged loan volume for March 2012 was $2.84 billion, and volume for the first 3 months of the year was €6.98 billion, almost $7 billion. March saw the successful syndication and close of several loan deals in the market, including Allcell and Iceland Food, including some which saw reverse flexes. This indicates that there's still sufficient liquidity now for a well-structured and well-priced transaction. However, the real question is how long this demand holds up, as CLOs start coming up to the end of their reinvestment period. The default rate by principal amount moved up to 5.3% at the end of March 2012, up from 4.9% at the end of February 2012, and 4.1% at the end of December 2011. Meanwhile, the default rate by issuer count is up to 5.1% at the end of March 2012, up from 4.6 at the end of February and 3.4 at the end of December 2011. Themes to watch for going forward, and in summary, A to E activity will continue to dominate as issuers address their maturity concerns, while CLOs are still within their reinvestment periods. With the high-yield bond markets opening up and bond for loan takeout starting again, we're starting to see the virtuous cycle start again. However, liquidity for loans is still dominated by existing CLOs, which are now approaching the end of their reinvestment cycle. Inflows into European loan accounts are still minuscule, with high-yield accounts getting most of the attention. With the primary markets open again, banks are willing to underwrite with the usual caveats. However, M&A activity is still muted, and even if it does pick up, it will be a while before deals come to fruition. In contrast to the US, where default rates are an all-time low, European default rates are starting to tick up and are expected to rise further during the year. That brings us to the end of our overview. I hope you found it informative. We'll update the analysis each month and plan to have analysis of other specific European market segments going forward. Check out LCD's YouTube page for other video analysis of the leveraged finance market, including US loan market wrap-ups. The link to the page is in the description for this video. For more information on LCD news or research in Europe, you can contact Anna Cini. You can email her by clicking on the link in the info box. Thanks very much. We'll see you soon.